G'day traders, Mindset Reset, Free Cash Thursday. Thursday is day 2 on the backside of the week. We have had an absolutely massive 2 weeks of trading and textbook playbook opportunities. I'm going to answer some questions and we'll talk about a couple of things about today. Some very powerful template textbook days today. Congratulations traders. Gold was an absolutely monster for several traders. We'll talk about the currencies in a moment. So front side, backside, a few more questions traders have asked. Still don't understand what you mean by front side, backside. It's very simple. If you just think Monday, Wednesday, Friday, Monday opens the week, Friday closes the week. When we hit Wednesday, that's the midpoint range of the week between the open and the close of the week. So Monday, Tuesday, Wednesday is the front side of the week. Wednesday, Thursday, Friday is the back side of the week. Think of it like a pump and a dump, or a dump and a pump. Or even just Monday to Friday is a front side, front half of the week, back half of the week. And why that's important is that as traders see now, today's a textbook example of that. We had major red news on the pound. We had major red news on the euro at different times. And we had Swiss National Bank. We had unemployment at 8:30. We had, I believe, flash services PMI at 9:45. So I want you to go and study those templates today. You'll notice that after the FOMC, several pairs traded into the new day above closing price, below in the case of the Canadian dollar, but above closing price for the entire 3 sessions. But you have to understand the larger picture of what's happened yesterday, right? We had the Fed, we had a market, most of the markets on the first part of the release expanded the range, broke a daily high, expanded the range, and then pulled back for a dump and pump in several pairs, 30 to 45 minutes after the second release for the explosive parabolic move through, in many cases, back through the high of previous weeks or previous daily highs. And then continuing that momentum, we've talked about that in the playbook, a second day momentum trade after FOMC. I can't remember the page number, but I'll talk about that later in a technical video. We'll often see carry through on certain FOMC days into the Asia or London sessions, often most of the case in Asia right off the bat. But go and look at those templates. In the case of the British pound, the market broke down below closing price, but we had low-hanging fruit, but we also now have daily templates that will turn into first red days. They've broken down underneath closing price, lower lows on the inside before pumping up and dumping. New Zealand dollar breaking down first ahead of the Australian dollar. Both pairs giving excellent trades. The euro, but the pound continued 8 a.m. major red news. Bank of England rate statement, I believe. Lower low, pumping up, coiling, and continuing to drop. Now, I want you to understand something about these types of days on certain instruments, is that traders will be trying to cherry pick off the bottoms. And this is why their accounts will get blown out, because in certain pairs, certain instances, certain days, they are not going to come back. Gold, I don't know what it's going to do now. It could still retest that low. It's pumped up off the low. It's already cleaned out the Fed longs. All the longs from the Fed, and that's what defies logic. Traders are looking, it's made a higher high, it's broken down underneath closing price, coiled sideways and collapsed. Well, in case of gold, it collapsed on top of closing price. Once it gets to closing price and the high of day breakout level, traders are trying to buy that low, and it just falls right through the floor, straight down another 100 pips into the longs from the coil after FOMC. So here's the thing. If you don't understand and you're not in the other trade, there's still other opportunities either to re-enter a move like that. But what you don't want to be doing is counter trending a market. That could be a 1 hour, 2 hour, 3 hour trade, or it may be an all-in day where they just keep falling slowly, as in the British pound, and it just stays down there. Remember, there's been fundamental data now potentially driving that move. So we've had flash services, we've had unemployment, we've had the rate statement on the pound and pound crosses. But more importantly, that may be part of the grand design of the pump and dump, where they just keep unloading and traders are trying to counter trend and they get blown out. So understand to never counter trend a template like that on the backside of the week, because they may not come back. And if they do, they might not come back until tomorrow in the new day, the Asian session. So by the time traders are trying to average into a losing trade, or they're trying to cherry pick off the bottom, they just keep getting hit. And again, I guarantee there'll be some traders who get chopped up on a day like this when it's a day to make a lot of money. So now that brings me to my next point. Understanding the importance of front side, backside. We have FOMC. Look at your templates. We can see some very well engineered templates for the entire week on a lot of pairs. We had inside days, we had first red day, first green days. But also understand that the backside is where we can see 5-star fully loaded opportunities like that, especially when we've taken out the high of a week or the low of a week, case in the Canadian dollar. And the opportunity, like Canadian dollar in London today, a beautiful parabolic trade. It went vertical in Asia, collapsed lower right off the bat underneath closing price, coiled sideways into the London Open and went parabolic, 50 pips, easy free cash. Those are textbook well-engineered charts. When the Canadian dollar pumps up above closing price into that second hour New York Open, major red news, it coils sideways. The third hour begins and it resumes its upward trend. Do not counter trend those templates. That will turn into a first green day. Gold, the pound, euro, New Zealand dollar, Aussie dollar will turn into first red days. Now, Swiss franc. Traders are trying to fade the news catalyst after it takes out of the high of the week, and that turns into a dump and pump right into the open of the 12 candle window, just resumes right back up to the high of the week level. So again, just buying and selling randomly on highs or lows is not necessarily a best trade candidate. Congratulations to the traders who hit gold niche. Nailed it, I know that. Several traders took advantage of the opportunities on the indexes. There was some nail and bails right off the bat. NASDAQ, beautiful parabolic explosive move, over 100 pips on the Russell right off the bat. It dumped down. So again, first hour, dumping down, coiled sideways into the second hour, right into the New York Open, inside of our basic universal entry criteria. Right at 9:30, explodes for over 100 pips straight through prior to major red news. Take the money, take the gifts that the market give you, and get on with your whatever other trades that you have. Take the money. Next point is, when we have big days like this and we go into free cash Friday, again, same rules apply. We can be looking for markets that are outside of daily boundaries, high or low of the week, coiled or potentially coiling. Some of the cross rate pairs may be coiling into the end of the US session for an explosive move in Asia. We can see reversals or trend trades in the London session. Again, there'll be opportunities. We have major red news again tomorrow. I think Chairman Powell speaking at 9 a.m. I don't even know if I'm going to trade tomorrow, to be honest. It's been a massive week, and I got to encourage traders to go back and just scroll through several of the templates, and you'll see opening range. Day 2, Tuesday, expands the range. Inside day, first red days, first green days. But look at the calendar. Whenever we have an FOMC week, and look at the different currency pairs to see the different templates, how they all traded. It's a great opportunity to educate yourself. Use 10 pairs to accelerate your learning, to see the different types of templates. The same process applies. Day 1, day 2, day 3. Reset. Day 1, day 2, day 3. Session 1, session 2, session 3. Sessions with no major red news. Where were there parabolic opportunities? Well, there was parabolic opportunities in Asia, parabolic opportunities in London. We had euro yen, pound yen on Thursday morning Asia time, Wednesday evening North America time, parabolic short trades, 50 pips, right underneath closing price, coiled sideways, right into the same process. So the other pairs, gold, pound, New Zealand, Aussie, they all blew off in the direction as soon as the day opened, following the momentum of the FOMC, euro yen, pound yen coiled sideways under closing price for a vertical parabolic reversal into the longs from the after FOMC. So similar but reversal trades. Look at the ones on the other pairs for trend trades, and then the bigger template 3-session setup underneath closing price, the exception being gold, but the breakdown, the coil sideways, but you're all trapped above, all 3 sessions trapped above closing price, and as soon as it dropped out, bang, it's a no, it's not coming back. So be very careful, don't counter trend. Traders, the opportunities are not going to go away, and as I said the other day, whether it's crypto, whether it's commodities, whether it's currencies, indexes, oil, gold, whatever, the opportunities will continue to show up in any market. If people are trading it, if there's money involved, and the big players are in those markets, there's going to be opportunities, rinse and repeat setups. This was a massive week, so congratulations. Keep it simple. Again, I don't hang around. I take the money, lock it in. Traders are, if you're still hanging around or if you're looking for different trades later on, remember tomorrow's Friday. Tomorrow's Friday. So if you're looking at something up high for a reversal, think they may hold it up there, and free cash Friday may be the day where they come back to get higher level longs or lower level shorts. So congratulations, traders. Been a big week. Keep it simple. Keep getting better. 1% better every single day. These templates will be there again and again and again. Love you and appreciate you. Have a great day, and may the markets go with you.